Welcome to New Home Insights, the podcast from John Burns Research Consulting. I'm your host, Dean Worley. If you want to follow market trends, demographics, capital, new ideas, and endeavors that touch on housing, we're going to try to make sense of that every couple of weeks. Let's go. Hi, everyone. This is Dean Worley with the New Home Insights podcast. It's springtime, so it's time for a deep dive into the all-important spring selling season for the housing market. See how that's shaping up. It's no secret. This has been a pretty wild ride so far in first part of 2025. We're recording this, by the way, about mid-April of 2025, but we're going to try to bring you some nuances and a lot of info and a lot of data to give you an idea of how the season and how the market is shaping up so far. For that, we have our exceptional team of analysts from the surveys. We have Jody Kahn, Senior Vice President. We have Dillan Krieg, a Senior Research Analyst. And Cara Lavender, she's a Senior Research Manager. Now, these are the folks who talk to everybody in builders and brokers, resale agents all across the country all the time, keep their finger on the pulse of everything that's going on. Before we do that, though, and get into that, I have a little special treat for everyone. We're going to talk with Jody Kahn. Jody Kahn is, as I just mentioned, she's a Senior Vice President. She's been with John Burns since, I believe, 2008. But she's had a storied career before that as well. Just want to talk with Jody a little bit, maybe trace just a few minutes with her career, ask her a couple of questions for some kind of lessons learned, because she's seen everything, been everywhere. She's not the person who knows enough about a certain market to be dangerous. She's the person who knows enough about all markets across the country to be helpful, to be smart, to help you make smart decisions. And there's a huge difference in that kind of talent and that kind of experience. Jody and Dillan and Cara, by the way, don't get me wrong. How's everybody doing?
Doing good. Good to be with you, Dean.
Doing good.
So let's start. Jody, just maybe talk us through a little bit, because you had tremendous experience on all parts, a lot of parts of the housing sector, including M&A and finance and capital. Just kind of walk us through a little bit of your career arc.
Okay, thanks, Dean. Out of college, I worked in some positions in finance, like corporate finance, more like financing for construction equipment, oil field equipment, all that kind of stuff. And I was in Houston at the time that the market completely fell apart. It was a very localized recession. And interestingly, I think you learn a lot during the down cycle of a market. So I went overnight from being a loan officer to a collections officer, which I had not signed up for, but learned a lot. I was able to move from there into working with my family. My father was a developer of apartments and some other properties, and it really got my feet wet that way. But moving past the lending side, I really dug into housing in joining this family and friends kind of boutique investment banking firm. And we were focused on arranging mergers and acquisitions specifically for home builders. And early on, it was really for private builders who decided that they either wanted to be acquired or merged to take advantage of some of those scale benefits. So that really brings me to 17 years ago when I joined John Burns Research and Consulting, and knew that I could take advantage of all these great relationships with builders, land brokers, et cetera, as you mentioned, Dean, across the country. And to this day, we survey people that I knew decades ago, which is really fun.
Yeah, and you know everyone. I mean, literally everyone. And that's been super valuable here with John Burns, because you're contacting everyone. And you knew, and I wasn't kidding about that. Jody really knows everybody's market, not just a national analyst. She really does have a deep understanding of just about every major housing market in the country. What are some lessons learned, some kind of takeaways, some wisdom to impart on the folks listening?
The first thing you need to know if you're in housing is there are cycles. I think about young people who are in our industry now who really have not experienced a housing cycle. And some of those cycle changes are kind of legendary, and often we learned really important lessons like don't finance long-term land assets with short-term money. That was really bad news, right?
Yeah.
Don't have all your eggs in one basket, and especially if that basket is a savings and loan, and then all of the S&Ls go kaput.
Personal guarantees. Stay away from personal guarantees. We've seen some mishaps there.
Yeah.
How about in terms of, I don't know, like relationships and dealing with folks within the industry?
In the end, I think these are some of my most important takeaways. I realized early on that developing relationships was more important than focusing on a single transaction. And as I already mentioned, I have relationships with people that I worked with, 20, 30 years ago who really trust me with the most confidential information. And that's been great. And there are also people I can go to and ask questions like, I'm hearing this in the market. Are you seeing this? What's driving this? Have you ever seen this before? And I'm willing to put it out there that I don't know every answer, and I'm asking others to guide me and mentor me with nuances in the markets. So that is a big deal.
Ask questions, be ready to learn. You never know everything, but you know a lot. So ask folks with experience. And I always find also in who do things something different than you do. Ask folks and talk to folks who do something a little bit different than you do and get those other perspectives. Because there's, you think about it kind of siloed a little bit, or you can be if you're not careful. And you got to reach out to folks who come at the market from some other perspective or even different industries even.
It's true. And you may have to challenge people a little bit, but do it in a kind and respectful way. Yeah. I remember one time sitting in a builder's office in the Indianapolis area, and the purchasing manager was telling me how amazing and fantastic their purchasing was. And frankly, every builder will tell you that their purchasing is, bar none, the best ever. But as he was telling me this, I started thinking about how he was purchasing. And I realized that his company's volume far exceeded the purchasing capacity of the trades. And they were purchasing everything turnkey. This means they were asking small tradespeople to buy lumber and electrical components for them. Whereas, if you're selling 300, 400 homes a year, you've got some purchasing power that you should be using.
I'm going to ask you an off-the-wall question, Jody. What period, again, your career goes back to the late 1980s, I believe. What period was the most fun for you as a participant in the housing market?
I actually think the years that I've been here at John Burns Research and Consulting have been the most fun, because our team is amazing, not just my immediate survey team, which is amazing with 3 stars, but really our company is a collection of experts, and there is a lot that you can learn from each other. And that being with the company has allowed me to take all those great relationships and essentially get paid to talk to and survey and reach out to people that I love to talk to.
That's 17 years though. 17 years. What, any period within that where you just thought it's really fun to be an analyst?
All of it, but probably the most interesting was during the pandemic, in that I realized as things started to shut down, that I had that opportunity to really understand closely what was going on. And I started surveying every single week. And I'm going to say about 10 days to 2 weeks after the shutdown, I already knew that housing was not going to be in the tank, which was the prevailing feeling at the time. And I remember reaching out to John Burns and saying, people are buying homes. They're buying them sight unseen. They're buying them on the internet. They're showing up and asking if they can buy a model home. And it was just that quick.
Yeah. Yeah. Even before builders started figuring things out, and they figured out things pretty quickly with being virtual and then later social distancing. Okay. The flip side of that, what was the least fun period? I'm trying to think of during the housing market where you weren't having so much fun.
The great financial crisis and the huge housing correction, that was such a difficult period for everyone, and definitely for me, and that plenty of builders, private builders that I knew and respected, went out of business for reasons that weren't really a failure on their part. And that was so painful. I know at one point we were tracking this in one of our reports, and over 100 production builders went out of business in just a few short years. That was very difficult. And it was a scary time too. You probably remember, Dean, when we heard live some of the events that were taking place and the government stepping in, and that whole idea of a lender or any business being too big to fail, and realizing how close to the brink the country really was.
Yeah, and it was painful too, and watching coworkers leave as well.
Mm-hmm.
Okay, well, Jody, thank you. I call that Jody Kahn Corner. I'm spelling corner with a K just to be because it's cute.
I love it.
So let's get to spring. By the way, I'm wearing I know this is a podcast, so visuals are always good, but I'm wearing the only shirt that I own with flowers on it. At least I think those are flowers. Oh my God, those aren't flowers. No, I think those are flowers. So that's in honor of our topic today, the spring selling season. Let's start with Dillan Krieg. Just give us kind of an overview. Start us off with just the new home market. How are home builders thinking about this spring selling season so far?
Yeah, well, first off, I'll say I wish I got the memo. I would have worn my flower shirt too. We would have had a real spring season in here.
I thought it was obvious, but that's fine.
Yeah, my bad. Well, overall, spring season, unfortunately, it's kind of started off a little bit disappointing. Builders are feeling some stress right now, especially when it comes to pricing, but also sales as well. So when we dig into it a little bit, overall absolute sales numbers for new home builders, particularly production builders who are working with a good amount of volume, they're selling about 3.1 homes per community. That is actually above the seasonal average that we usually expect for March. It is down year over year, though, and we are also seeing a slower pickup throughout the year in sales numbers than we would typically see. And a lot of this is coming as we're still dealing with these, pretty severe affordability constraints for many buyers. Mortgage rates are still elevated. There's also just so much uncertainty out there right now with politics, the economy, you name it, really. And that is keeping buyers home, and it's making builders have to work even harder to capture those sales. So while they are ending up getting pretty decent sales rates at an absolute level, the pickup is not where we want it to be, as well as the pricing that builders are having to use to get there they're really starting to feel that. So the way we're kind of putting it right now, overall, builders are just not feeling pricing power right now. Year over year, prices are essentially flat on new homes, net of incentives. So that's including when builders are changing around their incentive offerings. And overall, a third of the builders that we surveyed in March actually reduced their net prices month over month. So that includes either increasing incentives, or it means they actually moved their base prices slightly.
And this is in spring when
exactly. This is supposed to be
this
is supposed to be the strongest new home sales and pricing period of the year.
Yeah.
This is when we expect builders to be testing and just making outright base price or net price increases across their communities. But we are just not seeing that right now. And when we just surveyed, a lot of that info comes from our full builder survey that we do every month. We also do a mid-month survey in the kind of middle of the month as well that we are putting out within the next few days here. And we just heard from builders that April is seeing some of the higher incentives for the year. Through the mid-month, in the height of the spring selling season, April has seen the highest incentives, which is just not what we usually expect. We've seen incentives go up throughout the year, and it's just really putting a kind of a damper on what is typically the jubilant. It's the time of the year where builders are making a good portion of their sales, and they're really seeing good traffic, good volume, etc. But they're just not seeing that right now.
I was going to ask you that. How about traffic? Are you hearing that traffic is increasing, and what is the quality? I'm hearing a lot, by the way, that traffic is pretty decent, and even if it's down a little bit, the quality of the traffic is pretty good. We do see in times when there's a little bit less urgency, you do see the traffic, the quality, the seriousness of those folks being actual buyers be a little better. Are you hearing that nationally?
So we are hearing that most builders are telling us their traffic is pretty average, but that is combining two things, exactly as you mentioned, Dean. Quantity, really not that great. Really not a lot of people who are out shopping. But if you are out shopping for a new home right now, you probably know what you want. You're a serious buyer. And a lot of that is because the people who are out buying homes right now, they have a reason for doing that. Yeah. They might have had, a divorce or a marriage, new kid, etc. So they need a different space. They need to buy a new home. A lot of people who are discretionary buyers, just really not in the market right now. Again, that goes to affordability, uncertainty, mortgage rates, you name it, really.
This is an oddball question, but have you seen how do you see the active adult part of the market holding up to the degree? Because that is a very discretionary buyer usually. Is that I've seen it be here in the West where I am, and looking at these markets, it's kind of hit and miss, but you have seen some really soft community sales in some places. I think because of that.
Yeah, I think it's the same sort of thing. We're seeing it's a bit hit and miss. Some active adult communities still continue to sell really well, but we have to remember that in the active adult segment, there really are two different kind of buyer types. There are the buyer types that have a lot of home equity. They have money. A lot of times they might come from, major California markets or major Northeast markets. They have cash that they can go and spend and purchase a new home without worrying about mortgage rate risk. But you also have, folks who are more working or middle class. They might not have, those robust resources to just go and purchase a new home in cash. And those buyers are definitely feeling similar sort of things to what you'd see, more of the first time or first move up buyers in the market. And so it definitely is mixed.
We probably don't have data on this, I know, but it'd be interesting to see if places that are more impacted by Canadian buyers specifically are seeing a negative impact, because there is, shall we say, a little bit of ire in our neighbors to the north toward the United States right now. And we know tourism is apparently heading downward. I wonder if you'll see purchasing. And those in some markets like Phoenix, for instance, I know those folks are pretty important.
Yeah, I don't know if we have a lot of hard data on that yet, but the sentiments that we've heard are that the Canadian buyer, like the volume of those buyers is weaker than you usually expect it to be, which not that surprising. Not surprising
at all. How about resale agents? That's the the direct competition very often for new homes is not just new homes, but resales for sure. How's that? How are the agents? I know you guys survey resale agents every month. How are those guys feeling about the market?
I'll jump in here. They are usually the ones that are a little bit more optimistic. It's sometimes hard to get resale agents to tell us when things are actually going poorly. And it's interesting too, because the spring season is when new home builders are doing their chunk of their sales, right? But for the resale market, the chunk of existing home sale closings are coming from the summer. But really, we want to see agents' sentiment, especially in our survey, start picking up in the spring. We know it's a delayed when buyers are out, they're shopping, viewing homes, finally getting that close, and then 30, 60 days to close. And we're not seeing sentiments really pick up in our resale market. And a lot of it is there's, supply side pressures, there's demand side pressures. We know demand is wavering. Buyers are dealing with a lot of uncertainty, and we're seeing supply hit some all-time highs in some markets, in your Florida and your Texas markets. And one of the huge caveats with that is they're not great listings, right? And I know we'll dig into this a little bit more, but they're not doing great to compete with new home builders. We know the builders have these heavy incentives. They have the ability to do buy downs. So resale sellers are already on the lower end of that. But on top of that, these sellers have incredibly high price expectations with homes that need repairs. They need updating. And we just asked agents looking at listings that are on their market, how are they? Do they need repairs? Do they need updates? And they told us almost 40% of all of the active listings are in need of some kind of repair, some kinds of updating. And sellers just don't want to deal with the hassle. They don't want to deal with the cost.
Yeah, that used to be so easy to sell you sold as is and people were still going to line up for it. So that's just not true anymore?
Not true in some places. So when we talk about the Northeast, we talk about some places in the Midwest, we are still seeing a ton of bidding wars happening in the Northeast. We're seeing a ton of multiple offers. Yeah. Prices are really high. You're seeing robust year-over-year price appreciation on the resale and the new home side. But then again, you look at Texas, Florida, places that are pockets of the Sun Belt that see this rising supply. And I think our most recent survey had Southern Florida agents telling us that 0% of their current contracts were in a bidding war. There were no multiple offer scenarios, which really speaks to both the demand and the supply equation in there.
It does seem supply oriented too, because in California, there's still very constrained supply. Again, it's hit and miss, it's inconsistent, but conditions are decent. It sounds like, tell me if I'm wrong, that those non-Sun Belt, those middle of the market, those older Rust Belt, that's an unfair. Always thought that was an unfair characterization, but those places are kind of seeing decent conditions right now.
Absolutely. And you see that on the new home and the resale side. Builders are still seeing robust year-over-year price appreciation. You're seeing it on the resale front, and they're really benefiting from the lack of supply.
Okay. Cara, let's talk about new homes and new home sales and new home sales paces. You kind of teased it, or Dillan did earlier, or Jody did. One of you did. Someone did. That sales paces are actually pretty decent right now. Tell us kind of tease that out a bit.
They are. You'll see, different builders have different strategies, right? So there's always been builders that have always historically prioritized pace over price. And you've always had builders that do the opposite, right? Prioritize their price, protect their margins over their pace. They're okay with getting slower sales rates.
Yeah.
And we've seen some of this really become exaggerated recently as more builders are realizing that, okay, we can't hold out on protecting our price anymore because sales rates have to keep happening. We have to keep selling. So we've seen a shift of some builders who traditionally prioritized their price having to shift over to, okay, we have to get sales now. And that's, like Dillan was saying, is really where we're seeing cracks in the spring season. Typically, this is a time where we see incredible strength in pricing power. Builders are rolling back their incentives. They're pushing lot premiums. They're testing out base price increases, at least at their best selling communities or their best floor plans. And that's just not at all what we're seeing right now. We've been asking builders in our builder survey and these mid-month checks that we're running, are you raising prices? This is when you're supposed to be raising prices. Yeah. Are you doing it? And we have a handful that are saying, okay, we're testing it. We've done it, but we've had to backtrack. We've had to raise incentives. We've had to pull back those base price increases. They haven't been sticking, which is just not what you want to see or what we typically see in March and April.
It's going to be hard, though, for those folks. So sort of, let's call them pace-oriented folks versus price-oriented folks, or margin-oriented folks, because especially the larger publics, those tend to be more pace-oriented, and they're going to, if you're going to try to compete with them on price, that's going to be difficult.
Yeah, absolutely. And in this mid-month check we were just running, we were watching incentives over the course of the year, right? Going from January to now mid-April. And typically you would see you'd see the incentives come down, and that's not what we're seeing. And listening to these earnings calls, right? You had Lennar reporting about 13% margins or 13% incentives as a percent of sales price. These are hefty incentives that only the publics or the large privates can really keep up. And it's creating that bifurcation in the market of the big builders are getting their paces, they're hitting those sales rates, Dylan, we're talking about. And if you can't offer those incentives that buyers are really specifically shopping, they're shopping incentives now because they're so savvy in what's going on, then you can't keep up with these bigger builders who can't get the pace.
What is kind of the national overall price picture right now, year over year, a month, however you want to express it? How would you characterize pricing right now?
It is flat on the new home side. We, pre-COVID, builders would usually track around 4 or 5% year over year on new home side. And it tracked from about summer of 2024. We've been hovering around the 2%. But as we've watched that pricing power decline, builders unable to push prices, land prices, they have a ton of compressions on their margins right now. The most recent survey we had in March finally came in at about flat, 0% year over year. But when you really... What's interesting is you drill down in that, and Florida new home prices were down 5% year over year. Wow. So that's weighing down that national trend pretty heavily. I think Dillan actually calced this. If we pulled out all of the Florida markets, which are some big volume markets, you actually see the national trend go back to almost 2%. So it shows how important some of these big volume markets are.
Because when you weight that change and you take out a lot of that volume, you're going to have a big impact. How about in terms of like testing prices? Are you seeing builders, they're trying to figure out the market by continually testing prices?
They're trying, but not a lot are. There are definitely some, in, again, the Midwest, some of the California regions, the Northeast, that have been able in their top selling communities to test it out. But again, there's a lot of backtracking happening there. They're not able to really hold the price increases they want to, or they put a couple price increases in and then they offer a heavier incentive. And so the price increases are not sticking right now.
Given the cost of incentives, because those buy downs are not cheap, they can be extraordinarily expensive. Do you feel like, are you seeing evidence that the private builders, especially the smaller private builders, are again at a disadvantage because their cost of capital is almost always going to be more than the big publics?
Absolutely. And there's a ton of different reasons that the privates or smaller local regional builders are at a disadvantage, right? Just the terms of the scale of their footprint, their negotiating power with trades, and again, their cost of capital, right? To be able to get forward commitments and keep these heavy incentives on.
One funky thing I've heard is that, well, not funky, people have done this in the past when there are a lot of incentives in the market, but I've heard that buyers are literally competing or comparing just on the incentive. That they're not doing this fairly simple math to figure out what that means for the net price of their home, like to like. They're just going, hey, Builder X has offered me this. Can you match it? If not, I'm out the door. Are you hearing about that?
We've heard a lot of anecdotes about that. Builders coming in saying, okay, I went down the road. Builder XYZ was offering me this rate with this closing cost coverage and these options and design packages. What are you guys offering? And it's almost like they're shopping the incentive packages more than they're shopping the actual homes.
It's weird. I had an exasperated builder client saying, we even when their sales agents point out to them, hey, we still have a cheaper home, even less incentive because our base prices are less than that competition. It's like, no, I want the deal. I want to win this negotiation, I guess.
Yeah. We've been laughing about how the homes have become less customized and the sales process is more customized. The incentives are more customized, right? These homes are turning into just less options. They're all spec homes right now. And it's that sales, that's incentive, that whole process of actually getting the buyer over the finish line is what's becoming the custom part of the process.
I wonder if that'll have an impact on the sales process because we're seeing more and more, especially the larger builders, go away from agents. Certainly having agents on site all the time, do a lot more self-tours, and they talk to the agent eventually. But if you're in an environment where they really need to have a give and take with the agent, they might need to rethink that maybe.
Yeah, definitely might be a change in strategy or one that they thought they were going to be able to make that maybe they can't.
Yeah. Jody, let's bring you back. A more of Jody Kahn Corner, spelled okay, and talk about tariffs. We all want to talk about tariffs. It's not a controversial subject whatsoever. What's happening right now in terms of the impact of tariffs on housing, specifically with cost, with price, with builder outlook?
At the moment, I'd say that the builders have been in a wait and see mode for the most part on these tariffs and trying to think about how they might handle the eventual cost increases. So when we last surveyed the builders about cost, which we just did a few weeks ago, costs were up about 1% year over year. And that's actually pretty low because before the pandemic, costs were running like 4 to 6% year over year. So one's super low. And part of that is that the builders have been pumping the brakes on the starts. They've been backing off on the starts. They've already got a ton of inventory homes. And I think that particularly on the labor side, that has created an environment where trades are coming to the builders and asking for work. So there's no pricing pressure there. It looks like it will be coming through more on the materials. So we've asked builders, how might you prepare for this? A handful of builders were saying that they were talking to their suppliers, or maybe they were actually or thinking about stockpiling some materials. But honestly, most of them were just saying they were going to wait and see what happened. Now, our building products team at John Burns has calculated probable cost increases based on what we know today about actual tariffs versus threatened tariffs. And then they've interpreted that to what that would mean for a new home based on the mix of products that go into building. So that at the moment looks like costs would go up 2 to 4% or push home prices up 2 to 4%. Not terrible, but honestly, an environment that Dillan and Cara described in which the builders have no pricing power and are forced to offer ever-growing incentives. I don't see how the builders can raise prices to cover this increase in costs.
Yeah, and trying to hedge, like how airlines hedge on fuel sometimes, but and even though it's kind of an unpredictable market, the unpredictability level now with respect to tariffs is 11.7. It's massive. There's zero predictability in that. So how do you hedge that? That's got to be just impossible.
In fact, we heard from some builders who wanted to purchase some longer term commitments on lumber. And we heard that the lumber companies, the distributors, were refusing to take those long orders because they, as middlemen, are right in that, tough space between what's going to happen and they will get hit with those costs. So they were unwilling to promise particular lumber prices.
That's brutal. So they can't hedge even if they wanted to, at least on lumber. That's tough.
At least not right now. There are some other things that I think will unfold here. One is that I think the builders will argue pretty strongly with their suppliers to do some kind of a cost share so that they won't get hit with that full, 2 to 4% impact. And the promise would be that they would maintain some volume and help the supplier and the tradespeople out. So we'll see what happens there.
Yeah.
Another possibility would be considering some substitutions. But in talking with our building products team, there's a lot of things that go into homes that don't really have a good substitution, right? So that option is somewhat limited. The builders have already spent some time in the last 2 years value engineering their home, which is to say, looking at what features in the home really bring value to the consumer and stripping out things that don't add value, right? So I don't know how much there is at this point that the builders could still strip out, but I wouldn't be surprised to see a second round of value engineering taking place, and also examining the particular homes that they've committed to build in certain neighborhoods, the array they're offering, to make sure that they're building their most easy to build, cost-saving homes. Certain formats, particularly the box over box home, is the most efficient to build and causes the least hassles as far as like specialty cuts of lumber and other expensive pieces. So I think we might see a little bit of shifting there too. In general, it just doesn't feel like there's a ton that the builders can do but wait and see.
Yeah.
I think what is going to happen, though, is that the costs will start to rise. They probably will negotiate a bit with the suppliers. But ultimately, I think the builders will lean into the speculative starts. They really learned this lesson during the pandemic when things escalated really quickly and there were materials you couldn't get and price of everything was going through the ceiling, and they quickly realized that pre-selling was a bad idea in that environment. So I think they're going to lean pretty heavy into starting homes, probably taking them really far through construction, maybe even to the certificate of occupancy.
Yeah.
And at that point, when they know all the costs, then they can price the home and sell it to a consumer. And in that way, they'll protect their margins a bit.
Let me make sure I understand you right. You think they'll lean into getting ahead of the build schedule and continuing to, are you saying the reverse of that?
I'm just saying I think that they will be unwilling to do pre-sales where they're going to, they don't want to commit to a price and then figure out what it's going to cost them to build. That's what happened during the pandemic in the early stages. So lesson learned is if the costs are fluctuating or uncertain, you don't pre-sell. You wait until you really know your cost before you offer it for sale. And that means you're starting pretty much every home as a spec.
And they've gotten used to embedding and pre-selecting those upgrades and options anyway. And they're getting really good at it too. They usually are pretty spot on. I remember some mistakes along that when that really started going and they were pre-selecting options and upgrades. You did see a few, you overdid that. You overspec that. I'm not seeing that as much as a couple years ago or so. How about in terms of, and let's end tariffs with just, I think, tell me if I'm wrong, but what this whole tariff discussion has done is has injected a tremendous amount of uncertainty, not just among the builders, but of course, more importantly, I think among the buyers. I mean, are you seeing that? Are your builder folks responding and say, yeah, no, we have a lot of buyers. The reason they're on the fence is because they just don't know what's going to happen tomorrow or next month.
I absolutely agree with that. And for a lot of good reasons. I mean, the headlines on the possible risk of a recession that just alone could scare you from buying a house.
Yeah.
People are losing their jobs. Yes, federal government positions, but also in education and research positions. So that's concerning. The tariffs are really impactful for our ports, the major metros that have big ports, and everything related to handling of goods. Right. So when you think about logistics and warehousing and even trucking, all of these businesses are affected by what happens with the volume of goods that need to be moved here in and out of the United States. So if those numbers are going to plummet, which could happen because of retaliatory action or even just businesses refusing to order at really high prices, I just think there's an awareness that the economy doesn't look like a sure bet right now. And people are probably worried about their own jobs and the impact. So they're holding off.
Honestly, I think the market has been maybe a little more resilient given those hurdles, given those headwinds than you might have thought if you had, looked and say, hey, we're going to have this, global increase in tariffs. How's that going to affect the market? I think you might have predicted a more negative effect so far. Mm-hmm. Let's talk about something a little more upbeat, I guess. It depends on your point of view, but it's land, Dillan. Let's talk about the land market. Again, our surveys, we reach out to land brokers all across the country and have a really good sense of what's happening with the land market. Give us a lowdown on land.
Yeah, so I think there's a lot of really interesting trends going on in land right now. And this information is really hot off the presses with our first quarter survey, which we're still putting together everything for. But kind of the early read is that demand has fallen back over the last quarter. And this is, with the new home market feeling kind of some of the stress, a little bit of weaker home, spring season. That's totally not surprising. We would expect the land market demand to fall back a little bit. And we see this in, builder starts numbers too. Builders aren't starting as many homes month over month, like the month over month change between February and March. Typically builders would see a much larger increase than they showed us in our April survey. But overall, the demand is still pretty good. Most of the brokers are telling us that land is either kind of hot, on fire, maybe some in the kind of the warm segment, we call it. It's just kind of the middle ground. But overall, demand is still doing pretty well, especially for finished lots.
Is that true also in those like Florida and Texas that are, because of listings, because of supply, or maybe a little more challenged right now?
Yeah, that was my next caveat.
Sorry,
there.
I'm sorry.
No, you're all good. No, in Texas, Florida, some Northern California markets, we're seeing that some of the demand is actually a little bit weaker. And we're seeing builders starting to pull back on their lot purchases as really, this is not just because the new home market is weaker, but also because there's a lot of inventory already in a lot of these markets. Yeah. And, builders are under the they're under mandates, or they just really need to manage their inventory carefully, which they've successfully been doing. And part of that is managing their land positions.
Yeah. How about in terms of who are the sellers right now? Have you seen any trends in that regard?
Yeah. So, we're still seeing, long-term owners of land, developers are still who is selling land. We are seeing a really interesting trend, though, when you look at builders selling land. Yeah. And so this is both public and private builders with kind of different motivations behind them. So it's not like totally broad-based, every, seller is a builder, but we are seeing it pop up in certain pockets. So for the public builders, some of them are under mandates to reduce their land portfolios because they already have enough land. There's enough inventory on the ground already. And as they're pulling back on their starts, they just don't need the land that they have, and they're then selling it into the market to generate some cash flow. Yeah. On the other hand, though, when you look at some of the smaller private builders, a lot of them have been facing such pressure from the public builders that new home building for them isn't just as profitable as it used to be. And so what they're doing instead is they're becoming developers instead, and they're turning that raw land into those more desirable finished lots that public builders are really looking to get. And so they are working in that environment instead and finding a lot of success there.
I've seen that here. You're definitely seeing those privates. It's a great way to get a capital infusion. And if you're going to take your foot off the pedal a little bit anyway, it makes perfect sense to maybe, diminish that pipeline a little bit. Are you seeing that nationally, by the way? I think you are, but is it more private than public? I'm in that builder sell side.
Yeah, we're still putting together some of that data. It is definitely something we are seeing nationally, though. But it's definitely also going to be in some of the more expensive markets. You're going to see more private builders going into that sort of development environment, just because the cost of land in those markets is so high. A lot of times it doesn't always make sense for the private builders to really go in on a deal, and they can just make a really large profit from potentially working with the public builders and developing land for them.
How about that give and take, that negotiation? Are the brokers telling you that they are experiencing more negotiation? And follow-up question, are you seeing any thaw? Are you seeing a consistent thaw in terms of what sellers are demanding, or are they holding very firm?
So I think overall sellers are holding pretty firm right now. And let me touch on pricing, and then I'll go into the negotiations. Because on that note, while we're seeing new home prices flat year over year, land prices are not following suit. Land prices are still rising. For finished lots in some of the best locations, we saw land prices, according to brokers in our last survey, rise 9% year over year. So nationally, new home prices are flat. finished lots in some of those best locations is rising 9%. Now that's weaker for some of the less desirable pieces of land, for undeveloped land that's riskier and going to take more time. But for finished lots, and that's what a lot of the builders are like, public builders especially, are working with, prices are still up 9% year.
That's going to hit that pro forma pretty
exactly
hard.
And so that's a lot of the part of the margin compression story that we're hearing, and why builders are starting to pull back on some of those land positions, because it's just so unaffordable. And what's happening is a lot of times sellers, again, a lot of these sellers are long-term owners. If they've had this land in their family for 10 generations, they're in no rush to sell. They'll wait for the price that they want to get. This has been a continuing trend, but we are seeing that deals are starting to come back to the negotiating table a little bit more than we maybe expect to see. We heard from 79% of the brokers that we surveyed told us that they are seeing deals canceled, renegotiated, or both. So there are a good amount. And we have to keep in mind that renegotiations, cancellations, these happen in the normal course of business. But we are hearing from brokers that they're seeing builders who are facing tariff issues or some of those corporate mandates, like I've mentioned, to pull back on land purchases, come back to the table and either have to cancel or ask for, a lower price.
Yeah. And it's always one of the questions they're always thinking of themselves, if you're a builder, is if I walk away from this, I'll probably, ask for maybe a little bit of a give back. Are there builders behind me that are going to snap it up at the price I was going to pay? So if we see this downward pricing pressure on land escalate, we might see that happening. But as you said, so far, that's not happening.
Yeah, and it really depends on your market too. If you're looking for finished lots, we're still seeing a really short supply of finished lots, especially in super desirable markets. If you're working for undeveloped land and tertiary markets, there might be a little bit different there.
How about insurance? Are you guys tracking any kind of housing insurance, and have you got feedback on that?
Yeah, we just asked the brokers about if they're seeing any issues with deals falling through because of insurance. It was actually pretty flat year over year for comparison. We didn't see a big uptick from the brokers. One really interesting note, though, and I'll leave you this for some food for thought. The brokers in Southern California are telling us that they are seeing a lot of deals be affected by insurance, which is very expected. Fire insurance is a huge issue. And what we're hearing is a lot of townhome projects or stuff that people were planning for townhomes. It's just not feasible anymore because the fire insurance on those attached roofs has gotten so high and so unaffordable, both for the HOA, for the buyer, for everyone involved, that it just doesn't make sense. A lot of times they might not even be able to get insurance on those townhomes.
Is that even happening? I don't know if you know this level of granularity. Is that happening in places that don't seem like they're, fire dangers, urban areas or quasi-suburban urban kind of areas?
So it's going to be mostly in those like high fire zones, but kind of some of the methodology isn't always fully transparent on what exactly makes it a high fire zone. And so builders are facing that. Brokers are telling us they're seeing that. And that has also led to some compression on land prices for those Southern California sellers because the overall just price of, getting a project done, now that they also have these huge insurance costs and insurance issues they have to deal with, that is making the actual end affordability for that project suffer a little bit and get higher than they would want. And that means that what builders have to look for in terms of land prices, they have to draw back on that because they just can't make it work in the end. Yeah.
Jody, let's shift over to buyer segments. How does all of this that we've just talked about impact different buyer segments, different niches, maybe even different price niches in the market?
We, several years ago, began rating the buyer segments using the information in our builder survey because we asked the builders to self-identify who's your main buyer. We can then parse the responses and see what's happening. And for a while, we had all of the buyer segments. We combined a couple of them, but we had them rated as normal, and normal with almost an asterisk, right? Because the sales were holding up pretty well, as we said before. The sales rates are above the seasonal average, actually, but the pricing really was stinky. And so that's not exactly a normal market, but balancing the two out, normal was the closest bet, right? But in the last month, we downgraded our ratings for these segments. So we moved the entry segment, the move up paired with luxury, and then the 55 buyer segment, which would be like empty nesters and all of those folks. We moved all of them to slow because at this point, the sluggish sales and the high dependence on the incentives and price cuts are just really rampant across all of these segments. And I think for that 55 plus buyer, Dylan mentioned earlier that some of them do have equity and some wealth, but they possibly have exposure to the stock market, which hasn't been too pretty. And there's a whole dialogue out there that nobody really knows or understands yet about Social Security. So I think even that older buyer is feeling some nervousness.
Yeah. Those, like I said, honestly, age qualified buyers, everyone thinks they're equity rich and they don't worry about these things. They absolutely do. They're actually pretty easily spooked, and they tend to, because they have that long time horizon usually, relatively. They're very discretionary, so they can kind of, let's wait until things settle down a little bit.
Yeah. On top of that, a lot of them might need to sell a house. And we've heard of transactions of purchasing new homes falling apart because the entry buyer or whoever was buying their existing home was unable to close the transaction. So they can be held back if they still have a home. But I really think, like you said, Dean, it's feeling spooked, the uncertainty.
What do you kind of attribute that to? Is it, we kind of touched on it a few minutes ago, is it the recession thing? Is it the tariffs? Is that all those things, the soup that is kind of sapping the urgency of these folks?
I think so. A lot of people, just kind of people I've worked with over my career, the vibe is that if you know what's going to happen, you feel like you're in control. So if things are going downhill, you can try to plan for that. If things are going great guns, you can try to plan for that. But this on again, off again, not really sure where we're going tends to really sideline people because they just don't know what kind of decisions they should be making.
Is the stock market the biggest factor, you think?
I think that the vibe of the overall economy, the significant loss of jobs, the probability that with higher costs, that looks a heck of a lot like price inflation. Could we actually be in for rising mortgage rates again? So all of these different things create a nasty mess, like a knotted ball of yarn of all these different interrelated things that are just making people feel spooked.
But the price of eggs has to be at least top 3, I'm assuming.
Yeah.
I mean, I assume, given what we were talking about a few months ago, let's switch over to Dylan. Dylan, inventory. Inventory is we definitely keep an eye on inventory. It's kind of the best near-term measure of new home supply. What's happening right now with inventory levels among new home folks right now, builders?
Yeah, as we've been talking about, inventory has been a pressure on builders' pricing. It's also been a pressure on the land market. Overall, finished inventory remains pretty elevated for builders. We saw it peak later last year, but we're still pretty elevated in a lot of markets. Currently, builders are holding on to about 2.6 finished inventory homes per community. That's versus about 2 on a seasonal average basis. So it's elevated, but it's not crazy, and it definitely has cooled over the spring season here. The reason being, these finished inventory homes are actually really essential for builders to make sales. In addition to the incentives, this is really kind of the other side of the coin. By offering these finished inventory homes, they're helping buyers really get rid of that rate exposure and offer some of those really powerful incentives that you can't necessarily offer on a pre-sale home. And so overall, these finished inventory homes, while they have led to some pricing compression in some markets where there's a lot of homes all competing with each other, overall, they've generally been a pretty big benefit for builders to ensure that they make those sales rates.
I feel like there is kind of a paradigm change, to use a stupid buzzword, in that, because builders do really need a little bit what we think of as elevated inventory. They need that to make sales for all the reasons you just said.
Yeah, it's a double-edged sword is the way we put it. It's necessary to make sales, but if you get too much, you're going to have pricing pressure. You're going to have a lot of competition. And it overall, though, it offers a lot of advantages for the builder. You can offer a move-in ready home for the buyers. You can give rate buy downs. And overall, like Cara is mentioning too, all of the resale homes on the market just generally aren't in all that great condition. So builders, they have modern floor plans, energy efficiency. We were just talking to some clients in Florida who are talking about the need to have a hurricane-proof home is very important important for them and, disaster areas. So there's a lot of reasons that builders have been able to succeed by using these finished inventory homes. It's just, again, it's a balancing act to make sure they don't get over your skis with them.
That is the biggest advantage for new home. They can do things, the new home builders, that you can't retrofit in the resale world. I just saw something how KB Home down in Escondido, I believe, in San Diego area of Southern California, they built a, not fireproof, but a highly fire resistant neighborhood. I can't remember the marketing name right now. And that has, been, it could be revolutionary because it's extraordinarily more survivable than a normal stick built home. Jody, have you heard about that?
Yeah, I read the article about it. And actually, I also was reading kind of a related article about concrete and how it performs during some of the big fires. When you see those sad pictures, sometimes what you see left is the concrete foundation. And so there's kind of a vibe of, how do we need to shift how we build homes with using these materials that at a minimum last longer so people can get out and, it saves lives, but might actually also prevent spread or make it spread slower.
Dillan, back to you on pre. We talked about pre-selling a little bit ago. Do you think there's particular danger right now? And actually, anybody can answer this, please. In terms of starting out too high, I'm thinking it's anecdotally, but I'm thinking a couple of things in my markets where they maybe a little bit, maybe too strong a word, where they stigmatize themselves with beginning prices that were just above market. And right now, when things are a little bit funky in the market, that's a particular error you do not want to make. Does that feel true to you?
It is a risk out there for sure. And in such kind of it's definitely a volatile pricing environment where, 1 week can have a lot of incentive changes. You could have traffic, go down 1 week, up the other. It's a volatile market right now, especially with all, the political and news noise out there for folks. But, builders are generally going to try and get it right. And they generally do a good job at finding the, what base price they should start out as. But it is a risk because things change so rapidly. We've seen incentives rise just throughout the year. So what, might be a reasonable base price in April could change in May.
You mentioned earlier some of the advantages that new home builders have, like energy efficiency and the modern floor plans, et cetera. Is buy down still maybe the single most effective incentive and inducement?
We think it absolutely is. Really, it hits to the key issue for the buyer, which is that affordability problem. And by offering those buy downs, they really help get those payments down for the buyer. They really help offset some of that uncertainty because mortgage rate volatility has been a huge issue for buyers. And not only that, it's been a huge advantage for builders over the resale market, because you're going to be very lucky if you find a resale seller who will do so much as, buy down a point or 0.25% of your total mortgage rate. You're lucky if you get that. Builders are able to offer, 4.5% rates, 4% we've seen in some cases, sometimes with rate buy downs on top of rate buy downs. Extremely expensive, don't get me wrong, for the builder. And this is where the margin compression comes in. But for the buyer, when you're comparing, this new home that actually might have a better payment compared to this old resale home that needs some work, it's an easy decision to make.
I know I asked this last time when you guys were on the show in, I think, November, but have you seen any kind of those weird old school incentives like a car or something like that? I mean, I'm pretty sure you can probably give away a Cybertruck for free right now. Are you seeing anything kind of those funky incentives in the market anywhere?
I haven't necessarily seen that. We have seen, as I mentioned, buy downs where builders are offering, full 30-year buy down, so buying down the rate for the full term of the loan, and offering a shorter term buy down. So for the first year, you have a 3% buy down on top of your full year buy down. So if your full year rate is 4%, you might have a 1% rate for the first year of your loan if they, knock it down by 3 percentage points. But I don't know if Jody or Cara have seen any of those crazy incentives.
Jody, Cara, have you guys seen anything?
No, I haven't seen any cars or Cybertrucks, but I think it is important. So buy downs are most definitely what's moving the needle on the new home side. But talking to a few builders, it's been interesting hearing that while they are the most used and usually the most effective incentive, it's also just a huge marketing tool, right? So as listings are rising, there's more new home inventory. Builders have this platform to broadcast this eye-catching 4% rate. You don't have that on the resale side. So even if you do have a seller that's motivated or willing to offer closing costs or anything to get someone across the line, they don't have the platform that these builders have to be broadcasting these eye-catching rates to get people in the door. We know traffic volume is low, and builders have a way to get people, just capture them into the door.
Cara, let's stay with you then on resales. There, I know I kind of jumped the gun a little bit earlier on resales, but what's happening in the resale supply world that you didn't hit on earlier right now that is important?
Just that it's a little bit locked, right? You have the lock-in effect is still there. It's starting to defrost a little bit. Like Dillan said, there are people that can only push off their moves so long. They've had their second kid. They need the extra bedroom. They're needing to downsize. They don't need as much space. So there are people who are coming out and defrosting out of that lock-in effect. But for the most part, if you don't have to move, you're not in the market, right? And then on the flip side of that, if you're a seller, you're still looking at what your neighbor got 3-4 years ago, and you're really holding on to that. And that's a lot of the high price expectations that we're seeing and why so many price cuts on the resale side are having to happen. It was in the Wall Street Journal did a great article in December of, it was a record, I think it was up like 60% of delistings. So listings that were either withdrawn from the market or they expired and the sellers didn't renew. And so when we asked about it, it was really purely sellers were pulling their houses off the market because they just weren't getting the offers they wanted. It was truly, they were just holding on to these high price expectations. They let their house sit and they couldn't get it. People aren't willing to pay top dollar anymore for a home that needs repair and updates. And so they're sitting and then pulling them.
It's often too it's actually bad math in many cases too, because they think they've lost money, but they've actually, if they've whatever, 8 years, 10 years, they're still way, 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 way positive on that. But if in the immediate period, it's down $30,000 from what they thought they're going to be, I'll wait. They get angry. So here's a horrible question for you. What do you think the new normal is in terms of months of supply? The old days, it was 6 a month. That's clearly not true anymore. For a long time, for many years, most markets were under 2. Some were under 1 of months of supply. What do you think the new normal is? What should we be looking for in that metric?
That is a very regional thing. We were just looking at Florida and Texas, right? In those markets, there's several metros that are hitting 8 months of supply, 10, 12 months of supply.
Okay. Well, that's for sure not the new norm. That's high.
Those are not the new norms, but they're what's encountering right now. And that's where you see all that pricing pressure, both on the new home and the resale side. I think that getting back to that 4 to 6 is probably healthier. We talk a lot when we ask in our resale agents, we ask them, do sellers outnumber buyers, buyers outnumber sellers? And during a big period of that, right, it was just constant. There are way more buyers than sellers. We have no supply. And we show it as green on the graph, but that's not necessarily a good thing either, right? You need a balanced market. You need supply to meet demand. It's somewhere in the middle. And we keep having these markets, when you look at the regionality of it, swinging on one side, you have the Northeast versus Florida, some drastic differences. But coming back to that middle ground, that 4 to 6, that is nationally more normal, is where prices can stay steady. There are buyers in the market, there are sellers in the market, and it's a more happy medium that we keep straying from.
It's another one too, where the measurement or the perception of what's normal may have been skewed from recent history, because it does say I'm based in Northern California. Most of my studies are somewhere in California, Nevada, and in a lot of California markets. 1.5 has been kind of the normal for a very long time now. So it's like, 2.4. It's nuts. It's weak. 2.4 has to still be a pretty relatively supply constrained market, though, in terms of months of supply.
Yeah, absolutely. And it's those markets that hit those incredibly low months of supply that saw just a crazy run in prices. Yeah,
for an extended period. It's kind of like mortgage rates and how consumers perceive the normal mortgage rate of something like 4.5 or something like that. It's actually over 7.5 in the very, very long term. It's just because it's been so low for so long, there's just a new perception about that.
But also the consumer can access information about listings so much more efficiently than, like 8 years ago, 10 years ago. So that kind of argues to you not needing as much supply, because you used to have like a lot of listings and work with a broker who was going to show you a handful. Now, like your average person can go on, one of several different websites and get a pretty good idea what's on the market.
Yeah. Cara, you going to say something?
Yeah, just that on that mortgage rate, that's why we keep asking, especially when we saw some minimal, but we did see some, rates tick down a little bit in some of the first half of the spring season. And we're like, okay, is that spurring demand? Are people coming in your doors? And there's this magic mortgage rate, right? We've surveyed on it on our New Home Trends Institute side of that 5.5 is the magic mortgage rate. That's when everything is going to unlock and improve. But builders, like Dillan was saying, a lot of them are already buying down to, around the 4. And so that's why this minimal rate movement isn't really moving the needle for a lot of buyers or builders.
Honestly, I was always a little skeptical about that 5.5. It doesn't make sense. It's still so much higher than 3.0. For the folks who are handcuffed. And they are. They've been buying down to 4.99. And don't get me wrong, that's like we talked about, that's the best incentive they can do, but it's not magical. Mm-hmm. How about looking forward, Cara, in terms of, things you're looking at traffic, you're looking at sales ratings, how are we projecting forward in some of these key metrics?
Yeah, you brought it up at the beginning and you hit the nail on the head. We pay very close attention to our new home traffic ratings when we're asking builders, what is going on with your traffic? Is it better than you expect, worse than you expect? And it's a really good leading indicator of future sales of where we're going to see the rest of the spring season play out, where we're going to see summer go. And, on the volume side, it's really not there. It's not what we want to see in our March ratings. But like Dillan and Jody were talking about, buyers who are coming in the door are usually taking, the steps. They're qualified, they're serious, they're ready to make a move. So it does play a role, but just looking at the sheer volume of traffic right now gives us some pretty muted expectations for what's to come in terms of sales on the new home side. And we're really seeing that flow through when we ask builders and resale agents about their expectations for the next 6 months. We're seeing that optimism come down. It's much more muted than it has been in prior Aprils and Marches. And it's giving us a pretty good indicator that summer's probably going to underperform a little bit to what we'd expect, as we see even the resale agents who tend to be more optimistic, giving us some pretty muted expectations.
How about land sellers? What's our sort of thoughts in the future for land sales?
Yeah, like Dillan said, anecdotally, it's so important to kind of get a pulse on, are people holding off? Because like we're hearing, there are land sellers that are sitting on the side right now. They're not thinking of listing. They're going to hold off until they can get the top dollar in this environment. And that hesitation on its own is a signal that confidence in a spring rebound or a summer lift is pretty muted. And the land side is a good leading indicator of all the things to follow.
Are builders seeing any labor issues yet? Or is there expectation that they'll experience some labor issues?
So we've been watching on the policy side. We were asking on the labor front, on the tariff front. We've been keeping a really good pulse on, are the changes in policy regarding the immigration policy changes, deportations, is that going to affect builders' labor and therefore, give a trickle down effect on the supply chain? And the last 2 times we've asked this, the last 2 months, builders have given us some pretty positive signs that they're not experiencing any labor issues. They're keeping a good pulse on it. Corporates talking to all the divisions, everyone's well informed, but they haven't seen any meaningful impact on their actual labor and their availability and the cost. It hasn't come through, which is definitely a positive sign. And a lot of builders have their cycle time so dialed in now. So it's really positive on the labor front.
It does seem like the enforcement, at least judging by the headlines, I don't have any insight in that, the enforcement is not focused on work sites so far. And
that's definitely what we've seen. We had, I want to say 1 or 2 builders. When we do our mid-month checks, we're usually getting around 100 builders nationally. And out of that 100, I think we had 1 or 2 tell us that they heard wind of a roundup of deportations. And that was the extent of it. It wasn't on a work site. And across all 100 other builders we surveyed, no one's were seeing impact on their workforce. Maybe 1 or 2 people not showing up because of, again, rumors, someone's friend, family member had an encounter. But other than that, there haven't been any true impacts to their work sites.
Okay. Let's wrap up with, I don't know, what do you think builders see as the reason to be most optimistic, let's say, the rest of this year? Is there something you can put your finger on? Any of you, by the way, all 3 of you guys can chime in on this.
Given that there are so many reasons to be spooked right now, and the builders do have some traffic, and it's generally intentional traffic, that's a good sign, right? There are people who have legitimate reasons to be looking for a home now. Again, family-related things, but also we tend to think of like younger people getting married, having kids, all that. But also at the other end of the spectrum, people who maybe can no longer live in a 2-story home and they really need to move to, a ranch and have like an age-in-place strategy. So there are reasons for people to buy homes. And the wheels have not completely fallen off the bus because of that.
Yeah. Anyone else want to chime in before we bid you adieu?
One of the things builders I feel like have really hedged against is we've been watching cancellations, right? When COVID happened, there was a huge spike in cancellations. It's something that we follow really closely, especially, our cancellations driving a meaningful impact on the rise in inventory. And we've seen builders' cancellations rate hold incredibly steady, right around the 8-9%, which is completely normal. It's a function of the people who are coming in, right? They are more qualified. They're very serious. They need this home. A life change has happened. And on top of that, a lot of builders learned a lot of lessons during the COVID era. They have higher deposits to put down, higher earnest money. It makes it a little bit more difficult to walk away from the contract once you've signed it. And so those cancellation rates, once you've signed, for the most part, builders aren't seeing a huge spike in cancellations, which I think is a little bit of a green shoot.
That's great.
And I think one other thing to just keep in mind, and this might be a little bit more long-term perspective, but structurally as a country, we are still undersupplied in housing. We need more homes. We need more apartment units, and that's part of why housing is so unaffordable as it is, just because we are dealing with this structural undersupply. And so while in certain markets, we might have an excess of inventory at one moment, or, we're going to go through the ebbs and flows of the market as it is. In the long run, we are structurally undersupplied and we need more homes.
Okay. Well, thank you guys, Cara, Dillan, Jody. Thank you guys for coming on to the show and giving us so much great information. Appreciate it as always.
Thanks for having us, Dean.
Thanks, Dean.
All right. See you guys, and see you too, listeners. This is Dean Worley for the New Home Insights podcast. We will see you again in a couple of weeks.